Welcome back here with Money, and here is our tip of the week.
Wealth is not earned. It has to be created. Therefore, it's not enough that you invest whatever is surplus. The first financial resolution of 2016 should be to carve out the investable corpus from your monthly inflow after budgeting for basic expenses and before accounting for luxury spends.
In terms of resolutions, our suggestions would be: 1, keep a resolution to save more and keep a target, 10,000 rupees, 20,000 rupees per month. Keep a specific target that I'm going to save more this year, month on month.
Okay, so you've set aside money. But how do you put it to good use?
Simple data points like SIP of rupees 1,000 every year in one of the best performing diversified equity mutual funds would have given you a CAGR of 21%. That's an annual compounded return of 21%. So you do not need to do something that is complex, something you do not understand, something that is locked in. Just plainly keep it simple. For me, that's a very crucial point of making investment decisions for the new year.
Would you rather take 10,000 rupees every day for 30 days or a rupee which doubled in value every day for the same period? If you pick 10,000 rupees every day, you've made a very poor choice indeed, because this means that you have only 3 lakhs at the end of the month. Had you picked a penny which doubled in value every day for the same period, you would have been sitting on a pile that read almost 50 lakhs.
The process that needs to be followed is that you define your goals, assign a time horizon, and assign a target. This really helps you in terms of deciding which asset class you should invest in. Now, for example, when you're investing for the short term, your focus should be on safety of capital, so you go into debt products. When you're investing for the long term, then your focus should be to beat inflation, so you invest in equity. And so you must establish all your goals. So all those investors who have not been following this approach, my advice would be they should try and align all their investment to their goals. And also important thing is to create a separate portfolio for each of the goals. And why it is important is because many a times we have seen investor creating one portfolio, and as and when they require money, they keep taking out, and they realize after some time that they don't have enough money for their own retirement, or they don't have money for some other goal. So it's important to follow a goal-based approach and also make sure that there is a separate portfolio for each of the goals.
And in return for your patience, it's only natural to expect that you get some generous returns. So what is it that keeps going wrong?
Most investors focus on gross return when they analyze their investment. You must have heard people talking about, okay, I'm going to get 8% return or 10% return. What they do not realize is that gross return is only one aspect. You have to pay tax on that, and there is also inflation which you have to take care of. So many a times what we see is the net return that they get, or the net real rate of return that they get, is actually negative. So I think it's important for investors to realize that they need to create a portfolio in a manner that, especially when they're investing for the long term, that they actually earn positive real rate of return. Otherwise, imagine what will happen is, even if you're investing for 20-25 years, there will be a situation where you will realize that your money has just grown in numbers and not in value.
And don't forget your loans.
Pay down your debts, especially the high cost debt like credit card debt, like personal loans. Pay down those debts.
And how do you know when you have enough money?
Every year when you begin, measure up your assets, measure up your liabilities, know what your net worth is. It will go a long way in helping you plan your savings, plan your investments, and going for those milestones. As you build the financial plan, what are your milestones, what are the lifetime events that you need to fund for, what are the saving habits that you need to change, what are the spending habits you need to change. So it's always a great strategy to calculate your net worth, build a financial plan, and find ways and means to achieve them.
Every investor must ensure that they have taken the right insurance product and they have separated the insurance from investment. So they should not be really focusing on traditional plans. It's very common to see investors having 20, 30 and even 40 insurance plans. I think they need to understand that it's not about having the number of insurance plans, but it's also the quantum of insurance plans. So the first aspect has to be life insurance. The second is health insurance. Now, again, the quantum has to be right, and the type of policy that you take has to be right. So if it is a young family, a small family, they should go for a floater health plan. But if there are senior citizens in the family, then they should go for individual plans for them.
And remember, just planning your investments right is not the end of the road.
Once you've got the portfolio strategy right, your investment strategy right, your financial plan right, consult someone who's a financial doctor, who's an advisor to you, who can give you step-by-step approach in building a model portfolio, an investment portfolio. Review this versus your objectives every month. See how your asset allocation is, see how your concentration is, how your liquidity position is, and does it match up to what you started with in the first place. If not, go back. And finally, do not get sentimental about your investments. Investments are supposed to generate returns given a measure of risk. If they don't add up, you need to exit, cut your losses. Do not get married to your investments.
Research has shown that financial New Year resolutions tend to be followed much more committedly than the normal New Year resolutions, like what all of us have in the sense of losing weight, spending more time with family, etc. Financial resolutions, somehow we tend to go and deliver on much more in a much more committed manner.
Viewers, remember, keep writing to us at money@network18online.com. You can also find us on Twitter. Write to CNBC TV 18 News. Use the hashtag money. And remember that you can also log on to YouTube to catch this as well as all our previous episodes. Thanks for watching. We'll see you again next week.